world is troubled by the extent of the fraud and misconduct at FTX. We all agree on that. Too many people have lost money they thought was safe. Some have suggested that what we see at FTX was unique, a one-off caused by one immoral fraudster rather than something more widespread and systemic. So starting with you, Professor Allen, does this kind of carelessness, misconduct, or worse exist at other crypto firms?
Yes.
Mr. O'Leary?
Yes, the unregulated crypto firms.
Ms. Schulp?
Most likely. Most likely.
Schenken?
It's endemic.
That was a clip from Senate Banking Committee Chairman Sherrod Brown hosting a hearing earlier today titled Crypto Crash, Why the FTX Bubble Burst and the Harm to Consumers. And sitting on the witness panel was Jennifer Schulp, Director of Financial Regulation Studies at the Cato Institute Center for Monetary and Financial Alternatives. She joins us now. Jennifer, thanks for joining us on what is incredibly a busy day for you, I imagine. And just following up on that clip, if there are other crypto exchanges that are as mismanaged as FTX, are they a ticking time bomb? Is there another crypto exchange crash around the corner?
You know, it's difficult to say in specifics. Obviously, Chair Brown's question was kind of a broad one. Is there additional fraud or problems in the crypto ecosystem? And I think it's pretty clear that the answer to that is yes, in as much as there are in any ecosystem. It would be not right to say that there is no chance of anything untoward happening in the future. And that's really what I meant to say on that focus, not necessarily to warn of any particular ticking time bombs.
All right. Well, on the panel, some of the other witnesses heavily criticized Binance as being murky, as potentially following in FTX's footsteps. What are your thoughts on that line of narrative?
You know, I think without being inside of Binance's books, it's hard to say, but there's definitely been a push, rightfully so, for Binance to prove that it is in a more sound footing than FTX was. I think the steps that Binance has taken thus far are in the right direction, but I don't think that they give the comfort that most investors want to see from Binance on that topic.
Now, you told Senator Lummis that crypto can make our financial system safer and more efficient by removing intermediaries. This sounds to me a lot like DeFi, but Professor Hillary Allen, another witness on the panel there, was saying that DeFi, as it currently exists, is fraught with intermediaries. What are your thoughts on that?
You know, I disagree with Professor Allen in making a broad, sweeping statement like the one that she made. I think it's valid for us to have a conversation about what it means to be decentralized and what are the true hallmarks of decentralization. There are projects that say they're decentralized but aren't. I agree with that. But there are plenty of opportunities to have a decentralized set of circumstances that really does live up to the promise that DeFi and other decentralized technologies can have.
Did you get a sense of what lawmakers on the Senate Banking Committee felt about crypto after the hearing? Was they any sense of whether the FTX crash was because of bad actors in their minds, or do they think it reflects the greater industry at large?
Well, I think there was definitely a split on the committee, and it tended to be that Democratic lawmakers were far more skeptical of crypto on the whole. We've heard a lot out of the Democratic lawmakers of the kind of tried and true crypto criticisms, that there is no there, and that it's just a place for terrorists and drug dealers to move money. I think that those are kind of old and not fact-based at this point. But you did hear from several Republican senators the idea that FTX is not a crypto crash. FTX was a problem with the management of a particular exchange, a centralized exchange at that. So definitely deeply competing views of what crypto is and how it should be regulated.
What kind of regulation, if any, or policy from Congress is needed to prevent a disaster like FTX what we're seeing now? And will lawmakers act or just kick the can further down the road?
Sure. I think there's a lot of spaces where we can look to regulation to provide more clear guardrails in the crypto space. But I want to be clear that looking to regulation to prevent a situation like FTX might be looking in the wrong places. We've had fully regulated markets that have had Bernie Madoff, had Enron, had other situations that seem similar. So looking for regulations to prevent another FTX is difficult. That said, there are regulations and clarity that Congress can provide that make sure that some of the same risks that exist in the traditional financial system, where they exist in crypto, are treated similarly. Hopefully Congress starts to act in that space. Today's Senate Banking Committee hearing didn't give me a lot of optimism on that front. 2 of the 4 witnesses looked to ban crypto in one form or another, which is really not where the conversation is, and not where a rational conversation about how to regulate this nascent industry should be taking place.
All right. Well, speaking of legislation, U.S. Senators Elizabeth Warren and Roger Marshall are introducing the Digital Asset Anti-Money Laundering Act, which will bring Know Your Customer rules to crypto participants such as wallet providers and miners, and prohibit financial institutions from transacting with digital asset mixers, which are tools that obscure the origin of funds. The act would also allow FinCEN to require institutions to report certain transactions involving private wallets. Does this sound heavy-handed to you?
Oh, it's absolutely heavy-handed. And I'll note when Senator Warren introduced it today, this was not the way she described it. Her pitch during the hearing was that crypto providers need to be subject to the same rules that banks and brokers are. That's already the case where you're dealing with bank and broker-like institutions. Private wallets are completely different. It's essentially applying Know Your Customer and anti-money laundering requirements to the money that you have in your physical wallet, just in digital form. That's intensely problematic for privacy. It's intensely problematic for people's abilities to maintain their own currency outside of the government's eyes. That's a Fourth Amendment problem. That's a potential First Amendment problem. And the same goes for the idea of banning the use of mixers and other ways to allow people to meet their legitimate privacy needs.